Okay, it's another week. We're back in the habit, it seems, of doing these. So let's see what's been happening this week. Good week, bad week? Good week. Good week for me. Last week we were saying that silver was between these sort of VWAPs at the higher end, these VWAPs at the lower end. We zoomed in on the 4 hour. Down here we saw the clear divergence, bullish divergence, and we moved up. Fairly solid move up. 1, 2, doji. 1, 2, 3. Sort of dragonfly, I guess, doji. But we're above these VWAPs. We're above this key sort of fib channel resistance. We've broken out of this flag on the daily. We zoom out some more. This was the key pivot here, you remember, at 24.40. And we tested it, and we came back above it, and we back tested it, and we've gone up. And now, it's clear blue skies above. Hopefully. All being well. Because we have just given this little not quite. Oh, we've nearly overcome it. But we've sort of nicked it 2 times. Everything down to 25.30 was sort of a backtest, the breakout, so hopefully these levels are cleared now and we can proceed up. But who knows, maybe we'll get a deeper backtest of this channel, with the bull flag, and then go. Or maybe we'll just proceed pretty quickly to the upside. There we are on the big scale of things. So much data on the daily. Now we've been in this consolidation for so long. It's hard to squeeze it all on. In any case, if we look at the weekly. There we are. You can see this long-term fib channel line here was running and cutting and slicing through a lot of important price action, and we've closed above it, hopefully decisively on the weekly, after backtesting the 24.40. Also this top here, we sliced through here. Well, it's in alignment with the pivot, so it's much the same thing as I was just listing. So hopefully we'll be heading up to 30 now, and then from there, well. From there, where? Once we've got to 30. Oof, I don't know what that's doing there. There must be some justification for it being there. Yeah, hopefully it's go time. Enough faffing around. Let's go silver. Oops. I didn't want to do that. You see, you can minimize your price or maximize your price, but you can't get it back. You can minimize it. Whoop, there it goes. You get all your windows, but you maximize it. You minimize it. You can't maximize it again using the same button. That's a little bit annoying. Never mind. So silver's looking good. To back that up. Well, sort of. Let's have a look. Silver against stocks. So stocks finished weekly, should we say, this week. On the cusp potentially of a larger breakdown if they don't sort of rally immediately. This is the silver versus stocks ratio. We have silver against the S&P 500. It looks good. This was the positive reversal, and we've moved up against stocks. Some hesitation at the gap. So on balance looks good, but hesitation perhaps. Silver against bonds, we've broken above these old highs back from the summer, because bonds have absolutely crapped out, even though silver has only sort of moved into the top half of its long-term range. Is it too far? Is it too much? Or is it going to keep on going? Does it really matter? You tell me. Silver against gold. Trying to break this blockade of resistance here. And I said last time we'd come into this pivot here. And we've moved up from there, which is good, but are we going to continue moving up from there? Again, it's got potential. It's nothing definite. It's not looking like a one-way bet, but it looks good. It looks constructive. Silver against commodity index, so against commodities in general, still really appalling. So hopefully this is fuel for silver to reclaim its some lost ground against other commodities by advancing nice and strongly. Look at the quarterly. That's a juicy finish. I guess we've got to make it to. Well, if we can close again, the close above 24.30, 24.40 would be what you want to see. Well, that's right now, as of now. Of course, candles can go back down and shrivel up and die as much as they can keep advancing and looking better and better in a bullish sense. But at the moment, it looks good. It looks very good, very, very good. So, speaking of stocks, let's look at stocks. Here's the daily. You can see we've put in a head and shoulders and back tested this and moved down, and we've tested from the underside this whole load of resistance in here that was also just nipping the wicks, clearing these out here. You can see very clearly from what's that, the 21st, 22nd, we had a dying off of advancing strength and momentum as we approach this level. On lower time frames there were strong divergences. You can see you got the breakdown, back test, breakdown on this rising. That would have been a sort of rising channel, which just sort of extended it a little bit. Fake out at the top. So this has a bearish look to it, I'm going to say. Here we are on the hourly. Let's get back up to the daily for a second. Yeah, so wow, okay. So I've gone VWAP mad. Well, the issue is when I reduce the amount of data on my charts, especially if you go intraday, they change. Especially these ones here that are close to where price currently is. These, if I go down to like an hourly chart with, say, I don't know, 200 units, whatever, they change. They're not at the levels they should be. Anyway, I've gone VWAP mad. I've put a VWAP on the highest close before the Corona crash and on the lowest close of the Corona crash, and I've ignored this whole rally here because it just didn't look like significant highs and lows to me. I mean, would you pick this one? Would you pick this one? Would you pick this high? Would you pick this high? This is fairly clear cut. And then same here. This is the most recent local high. So from the highest close, and then again here the lowest close. I've stuck on these VWAPs, and you can see the pink VWAP from the highest close of the local all-time high. We back tested it along with the neckline of this sort of head and shoulders business, along with the pink VWAP. So they both came in together at the same area and were rejected. But we found support where? On this price pivot that's been on here for a while. Yeah, you can see I got my up down, above below, key level arrows, and the VWAP from the low close at the local bottom coming in at support. Now these are VWAPs from the Corona close, high and low. I believe I tried putting in let's actually do that. Let's put one in from the 9th of March 2009. If it's got volume data, it might not have volume data. See, they only put the volume data in from summer of 2016. Oh, that's annoying. So we can't put our VWAP here. In any case, the VWAPs from the Corona high and low, prior and after, whatever, crash top, crash bottom, we're below, well below 4K, well below 4,000. Or it doesn't like that. Well, I didn't program it, so you know, and maybe if there was a better way of doing it, then oh no, it's worked. They've stayed in the right place. Looks like I have to recalculate them though fairly. Yeah, there it is. Yeah, fair enough. Hourly. Low, 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 low. We keep coming to this level. Is it going to hold? What do you think? That's a lot of retests. And the fact we got the rejection from the neckline, from this important VWAP, and we'll look at the internals, you know, in a second. They're not looking great. I would be short biased, personally. We look at another index. If we find our Nasdaq, here we go. Yeah, similar type thing. We've rejected. That's a weekly trend line, and also I picked this out as an important zone for some reason or other. But you got the same kind of thing. The head and shoulders isn't as clear, and if we draw the neckline on, if we say that's, you know, it didn't make it there like it did in the S&P, but similar type thing going on. The top was back at this key fib channel line. We found support on this key channel fib channel line, this long-term fib channel line. So, that's a lot of rejection going on. Of course, it could erase it. It could erase it in 10 seconds if it wants with a massive upthrust, but on the face of it, not good. Let's look at some other things. So NIOD. Yeah. Ambiguous, I suppose. You can say that's an impulse correction. You have to say the same thing about price, but price looks ugly, as we've discussed. Just got an ambiguous look to it. Long established downtrend. Well, price was going higher, perhaps displaying that long-term rot in the markets, which would give one a negative bias. NIAD. It's under both its MAs. Price made a high above these highs. NIAD did not. NIAD made a lower high. Negative divergence. Rhinia. We recovered to our extreme, we recovered to the 80 level, but again we didn't hold it. In the bull market we get over 80, we make a show of strength, we show we can hold it, we have a quick nip back down and we start going back up again. Suddenly this flips. Now what we're doing is we're just barely getting to the bull market strength line of 80, and then it's a scolded cat each time. Bearish. And of course here we are, NAHL, Nasdaq, new highs minus new lows. Bull market mostly above, bear market mostly below. Where are we? We're below. Stocks have continued to run up against bonds. A little bit of a reverse candle here in the ratio. Not too important. Oh, I forgot while I was looking at silver, tip shy. Yeah, so real rates, the measurements of real rates. Real rates going up, metals going down. Real rates going down, metals going up. Real rates going down, metals going up. I don't know, it's not massively helpful. It's probably more helpful for gold, and even then, not massively. But again, it's not an unconstructive look, it's not a worrying look. Speaking of which, gold on the weekly, triangle breakout, spike up, spike down. I mean, if we move this box around and say, well, you know, I had my box in the wrong place, we'd run a back test on that level. I thought it would be more sort of under here, you know, under this wick and in line with this top, but maybe that was it. So let's delete it. The daily, however, we're up at the resistance at this line. That's a weekly line. We've been channeling. You see the channel here now. That's what we back tested. You wouldn't want it to go below 1960. That might open the way for further downside. The dollar is important for the movement of metals. We looked at this last time. We said we'd reached the apex of this triangle. We're sort of, you know, we're shooting around inside that area, and we've actually closed quite strongly. You know, we tested under these lows here, found buyers, but then they emptied out up here. But the close was strong. I mean, what's there to say about that? So even though the dollar's been going up, even though maybe it turns out this wasn't the level to be, because people could still have been selling, they may continue selling into these levels, or it could have tapped it and exhausted it, and there's no more sellers left. No buyers are going to sell in this area, and we go further up. But either way, it's you know, silver's been going up at the same time. So would continued dollar strength be something to worry about massively? Potentially not. Potentially not. Let's go down to the intraday time frames. These swings. It's that kind of volatility that makes it hard to gauge. Maybe you say under this trend line. Under this trend line sell. It's done, it's cooked. Semiconductors. Now I said last time we looked at semiconductors, it was, if anything, what was making me say indexes would probably struggle, because semiconductors looked so bad and it's continued to decline. So it was semiconductors was the tip of the hand there in the markets as far as the broader indexes, the broader markets, the indexes were concerned. And it's finished by doing a big back test of this weekly line, which is a duplicate of these lines of angle that previously have been a good fit just across years of price action. You can see we've tapped it and we've dropped that trend line, that line of angle. We've tapped it and we've dropped. So semiconductors also has an appalling look to it, which is potentially another tip of the hand of the markets. Another contextual clue. The stocks are going to be in for further rough times. Uranium. That's what the daily chart looks like. It looks very good, doesn't it? You put it on the monthly. That's constructive. Very constructive. This backtest here was amazing. Big time positive reversals on the indicators at support, and boom, boom, boom. Ever since then on the monthly, fantastic stuff. The weekly, it's a little bit heading up into space with all these. We're heading up into, you know, this top here that was a big top, you know. Maybe we're coming for these levels up here next. Oh, don't do this to make them in just a box. You can do it. These levels up here. Or maybe 1, 2, or A, B, C, further correction. You know, we are getting quite elevated relative to this high where people were getting out. So will people want to get out again? I would say... Ooh, what would I say? That's an important level. I'm going to say that. On the weekly. On the daily, you can see we've pulled back a bit from those levels. You'd want to see finding support on lower time frames, positive reversals at support on lower time frames if you were going to buy. Trend is up. You can't argue with that. The monthly look good, as we just said. Monthly looks fantastic. So you've got to go with it. Basically, you've got to go with it. It's you know, we're going up. The monthly looks good. On the daily, we're a bit extended, but it's the overall context that matters the most. You've got to say it looks good. There we look at the 2 hourly. Yeah. I don't know. But I like to say it looks good. If I was in uranium, I'd be trying to buy it. We've looked at that. We've looked at that. Yeah, the euro. See, on the daily, it looks really good. We've sort of come down to this channel low again. We're intersecting with all the kinds of support on high time frames. We've got divergences coming out of our ears. Like on the weekly, it's still... It's right. It's at such a key point. It's at such a key point. It'd be amazing if it held here and we got the dollar reversal. Because that would have such a beautiful look to it. And again, you know, these divergences have been kicking in for a long time. That's quite a local one there. You go on something like the 2 hourly. And again, it's like the dollar had that spasmodic movement. We see the inverse, the reflection here in the euro against the dollar. Yeah, it'd be tempting to buy. All else in the narrative of the dollar having problems, metals being a benefactor. All that together, maybe the euro is going to go up as well. Anti-dollar assets. There's your GBP USD, beautiful channeling action. Divergences. Come on. At these lows, channel lows, just nudging under these lows here and finding buyers, finding demand. Should look good. The longer term picture is, you know, there's a whole lot of there's a big bucket. There's a big bucket we could potentially go and scrape the bottom of if we don't find support here. But it looks good. It looks good. Go on the hourly. Yeah, not very enlightening. There's that insanity up down that we saw in the other pairs. Let's look at agricultural commodities. What's there to say other than wow. Wow. Looks like it's going to keep on going. In my humble opinion. And I think that's it. Let's leave it there.